Welcome to the Deep Dive.
Great to be diving in.
Today we're really zeroing in on Hertz Global Holdings. That's ticker HTZ.
Yeah, a name that's definitely been making waves lately. Lots to talk about.
Absolutely. We've gathered quite a bit of info to try and paint a clear picture, especially for potential investors.
Right, because there are some pretty significant developments.
Exactly. We really want to unpack the buzz around billionaire Bill Ackman and Pershing Square jumping in.
A huge investment, yeah.
And then there's all the speculation swirling around robo-taxis, autonomous vehicles.
The future-facing stuff.
Right. But we also have to tackle the risks. Because, let's be honest, there are definitely risks here.
Oh, absolutely. Essential to cover those.
Okay, so let's start with Ackman. Pershing Square Capital Management taking that big stake really seemed to jolt the market.
It really did. You saw that massive stock surge, what was it, April 16th?
Yeah, over 56% in one day.
Which just shows you the kind of weight an investor like Ackman carries. Market sentiment really shifts.
Totally.
Yeah.
But, even with that huge one-day jump, it's important context. The stock was still down over the past year.
Good point. Down about 11%, I think. So not exactly a smooth ride up until then.
Not at all. And here's where it gets even more interesting. Pershing Square initially said they had about 4.1%.
Right. That was the first disclosure.
But now it seems their total holding through shares and these swap agreements is closer to 20%.
Almost 20%, yeah,
Yeah.
which makes them the second largest shareholder now.
And those swaps, they basically give them the economic exposure without having to own all the shares directly right away.
Exactly. It's a way to build a position. And it looks like a very deliberate strategy.
Especially since they apparently got special permission from the SEC to delay that initial filing.
Which suggests they wanted to buy more shares before the news got out and potentially push the price up.
Classic activist investor playbook, maybe. Take a big stake, then push for changes.
It certainly points in that direction. When an activist like Ackman gets involved with nearly 20%, you often expect them to try and influence strategy, management, something.
Definitely signals potential shifts coming for Hertz's future.
And you mentioned something else interesting earlier, the short interest.
Oh, yeah. That's unusually high, right? Almost 39% of the float.
Extremely high. That's a lot of people betting against this stock.
So when someone like Ackman comes in strong, it really sets up the possibility for a short squeeze.
Exactly. If the price keeps rising, those short sellers might have to rush to buy back shares to cut their losses.
Which just adds more fuel to the fire, potentially pushing the price up even faster.
So for investors, Ackman's move isn't just passive. It could really shake things up, both strategically for Hertz and for the stock itself.
Okay, so Ackman's presence is a big factor. But let's talk about the company he's invested in. What's the underlying financial health here?
Yeah, that's the crucial question, because Ackman's investment doesn't just erase the recent financial struggles.
And those struggles look pretty significant based on the 2024 numbers. A $2.9 billion net loss.
It's a huge number, especially when you compare it to 2023, where they actually turned a profit of about $452 million.
Wow, quite the reversal. And the official 10K filing showed an even bigger loss, right? Over $3.1 billion.
That's correct. So a really tough year financially.
What drove that? The reports mentioned higher depreciation, impairment charges.
Right. Basically, their cars lost value faster, and they had to write down the value of assets. Plus, there was a reserve set aside for bankruptcy-related litigation.
And vehicle depreciation and lease costs specifically jumped massively, like 77%.
Yeah, a huge increase there, and a big chunk of that seems tied to their electric vehicle strategy.
Ah, the EVs. They made a big bet on Teslas and others after bankruptcy, didn't they?
They did, but it seems the resale value of those EVs dropped much faster than they anticipated.
Leading to big losses when they sold them.
Exactly. In the fourth quarter of 2024 alone, they lost something like $245 million just from selling off EVs.
Ouch. And now they're pulling back on that strategy.
Seems that way. They've started reversing course, which suggests they realized it wasn't working out, at least not in the short term.
So all eyes will be on the next quarterly results then. Q1 2025 due May 12th.
Definitely. Investors will be looking for any signs of stabilization or improvement after these recent shifts.
But beyond the profit and loss, there's the debt issue, too. How significant is that?
It's pretty significant. Over $6 billion in debt on the books.
Including that $500 million junk bond they issued back in December.
Right. Higher risk, higher interest debt. And we're hearing they're looking at debt restructuring options.
Which usually means they're feeling the pressure of those obligations.
It suggests they need to find ways to manage that debt load better. Plus, there's that ongoing legal fight over the bankruptcy payout.
The make-whole payment, how much is that potentially?
Reports suggest it could be over $300 million, so that adds another layer of financial uncertainty.
And didn't they just raise more money recently at a really high interest rate?
They did. $500 million in secured notes at 12.625%.
Wow, that's steep. Really highlights how tough the financing environment is for them right now.
It absolutely does. It paints a picture of a company in a, let's say, delicate financial position.
And what are the analysts saying? The folks who follow this company day in, day out.
Generally, the sentiment is pretty cautious, leaning towards pessimistic.
A sell rating overall.
That's the consensus, yeah. And the average price target, even after Ackman's investment boosted the stock, isn't dramatically higher than where it was before he jumped in.
So the professionals are still seeing some fundamental challenges, despite the activist excitement.
It seems that way. They appear focused on the underlying financial health and the competitive pressures.
Okay, let's shift gears a bit. There's all this talk, this speculation about Hertz getting into robo-taxis, autonomous vehicles.
Right. It's a hot topic in transportation generally.
Yeah.
And Hertz, well, they have some history here, actually.
They do.
Yeah, they had a partnership a while back with Aptiv in Las Vegas, managing some autonomous vehicles there.
Ah, interesting. So they've dipped their toes in already.
It suggests they've been exploring it, trying to build some expertise.
And hasn't their own management, like the CIO, said something about this?
Yes. The CIO basically said Hertz is ideally suited for autonomous operations because of their fleet management experience.
Makes sense. They know how to handle lots of cars, maintenance, logistics.
Exactly. And they also said they're closely monitoring the trend.
Are they investing in tech that could support this? Like that AI inspection partnership?
That partnership with UVI, yeah. Using AI for vehicle inspections could definitely be useful for managing an autonomous fleet down the road.
So no official robo-taxi service launched yet, but the pieces seem to be potentially moving into place, or at least being considered.
It looks like strategic preparation, maybe. Getting ready in case the technology and regulations mature to a point where it's viable.
Which brings up a huge question. What would widespread robo-taxis mean for their traditional rental business?
It's a double-edged sword, really. There are definite risks.
Like losing business for short trips, urban travel.
Exactly. Customers might just grab a robo-taxi instead of renting a car for a day in the city. Preferences could shift.
And Hertz might have to pour capital into building an AV fleet, maybe taking away from the core rental side.
That's a possibility, too. Resource allocation becomes key.
But what about the opportunities? You mentioned their fleet management skills.
That's the big one. Running a robo-taxi service requires exactly that kind of expertise, which Hertz already has.
Could they run fleets for other companies? Maybe. Or operate their own?
Both are potential avenues. You could also see hybrid models emerge, maybe robo-taxis for some things, traditional rentals for others, like longer trips.
And the tech they invest in for robo-taxis might benefit the regular rental customers too.
Potentially, yeah. Better inspections, maybe smoother check-ins, things like that.
But this transition won't happen overnight, right?
No, the consensus is it'll be gradual. Traditional rentals will likely still be important for quite a while.
So if Hertz plays its cards right, embracing this could make them a broader mobility company, not just car rentals.
That seems to be the long-term potential, yes. Becoming more of a mobility as a service provider.
Okay, fascinating potential future. But let's bring it back to today. We need to talk squarely about the risks of investing in Hertz now.
Absolutely critical. And there are several significant ones.
Top of the list has to be that debt load we discussed, potentially $18–19 billion long term.
Yeah, it's a huge amount. It really restricts their financial flexibility and raises the risk of needing to restructure down the line if things don't improve.
And tied to that is the ongoing struggle with profitability.
Right. Despite big revenues, they've had trouble consistently making money. Negative margins, negative earnings per share recently. It's a tough, capital-intensive business.
Then there was that data breach recently, even if it was a third-party vendor.
It still impacts reputation. Customer trust is fragile, and breaches can lead to legal headaches, too.
Plus the existing legal issues, like that $300 million bankruptcy payout dispute still hanging over them.
Creates ongoing financial uncertainty. You add that to the negative analyst sentiment we talked about.
Right. The downgrades,
Yeah.
the cautious price targets. It reflects real concern.
And the industry itself isn't easy. Fierce competition, it's cyclical.
Plus pressure from ride sharing, uncertainty around used car prices, potential tariffs, lots of external factors.
Exactly. It's a challenging environment even without Hertz's specific issues.
And we saw with the EV strategy, there are execution risks when they try big strategic shifts.
Definitely. Past missteps make you cautious about future big bets, like could a robo-taxi push face similar hurdles?
And with negative free cash flow and high debt, is there a risk of needing to raise more money? Maybe diluting existing shareholders or another restructuring?
That's always a possibility in this kind of situation, yes.
Finally, any instability in management could also hinder a turnaround, right?
Absolutely. Consistent leadership is usually key when navigating such complex challenges.
Okay, so wrapping this all up, Hertz is definitely a complex story right now.
Very much so. You've got the Ackman factor, injecting some optimism, some hope for strategic change.
But then you have these really substantial financial hurdles.
Yeah.
The debt, the recent losses.
Exactly. Those are major concerns that investors just can't overlook.
And the robo-taxi potential is out there, but it brings both opportunities and risks to their existing business model.
It's a future possibility, but the current challenges are very real.
So potential investors really need to weigh that possibility of a turnaround, maybe driven by Ackman's influence.
Against the significant financial and operational headwinds the company is clearly facing.
It's a balancing act. And as always, please do your own thorough research. Consider your own risk tolerance before making any decisions.
Essential advice.
Well, thank you for tuning in to the Deep Dive here on Stock Explorers. If you found this helpful, please subscribe, give us a like, and hit that notification bell so you don't miss our next analysis.